Welcome back to another episode of Chad Trades, coming in from a surprisingly chilly Sunshine Coast, Australia, where we're going to really quickly zip through this. We're going to zip through and have a look at the signals that show that this was obviously a bull trap over the weekend, how you can prevent yourself from getting trapped next time if you did, and then also some shorter term price action, what's going on right now, and how to prepare for the news that is coming in this week with the FOMC meeting and the recession news. So let's get into it and let's get going. So here we have the Bitcoin chart on the weekly. One candle equals 1 week. We can see two simple moving averages, so two basic moving averages on the weekly chart. So this is the 10-day, so the 10 week, and it is the 200 week, the one that you've probably heard a lot about. So you can see right here on this last week that's just passed, we've crossed above two very important weekly moving averages. 1, 2 there. See, just please in future remember, when we bust across moving averages of importance that you probably see on social media, that are seem of significance, just chill the fuck out and don't get baited, because these are prime bull trap areas, and they will bait you in. They will break key levels and then they will dump on you. They will dump hard. You need to use proper confirmation when trading significant breakout levels. These confirmations can be just as simple as a candle close. See, we didn't even close that week above either. A bee's dick below right there. No confirmation whatsoever. Just a breakout. Get the hype, get the FOMO, get you in to a trade, to a long, and then dump on you. Take your money most likely. Yoink, yoink. Another interesting metric that I want to show you in relation to the 200-week simple moving average is on the Glassnode newsletter. There are two, as you can see here in the photo, there are two on-chain analysis moving averages that they use similar to simple moving averages basically, but they are the realized price. I'm talking about the two ones down the bottom here: realized price, BTC realized price, and long-term holder realized price. So realized price is the average price that all Bitcoin were bought at, so realized at, divided by the circulating supply. And you can see here that these two were in the exact same place, where we broke above this these moving averages recently. The weekly moving average was in the exact same place, poked the head back above, no confirmation, back down below. This means one of two things, obviously going to go up or down, but if we break back above and create a floor here, not only on the 200-week simple moving average, but on these two on-chain analysis moving averages, the strength of the base support level is going to be more than just the 200-week simple moving average. You've got on-chain back in it as well. And then also, if we do retest the top side, the opposites happened, where we've got 3 cases of strong resistance on the upside, not just the 200-week simple moving average, but there is a strong overhead resistance, and it's going to be a lot harder to break and stay and move above, and potentially more downside expected. Now just back here briefly to wrap it up on Bitcoin price analysis on the 4-hour chart. One candle equals 4 hours. Just want to simply do this. Most people, a lot of professionals dislike diagonal trend lines. Obviously it's difficult to create a working strategy around them, but if we just simply draw diagonal trend lines roughly that are parallel and they work, you'll see this rising ascending channel formed, and you can just see an easy base, consistent touches: 1, 2, 3, 4, 5, 6, 7, 8, 9 if you count it, 10. So you just literally, I mean, this is a bear flag, yes, this is a bear flag. If you zoom out, it's definitely a bear flag. But if you just assume the trend line and it's just such a basic, obvious channel like this is going to continue, you would have been right 10 times already, or 9 times already. You know, obviously it's formed there, 1, 2. You're just consistently right. You'll be wrong 1 time when it leaves, but if your risk management is fine, then the 9 times that you were right will obviously pay a lot more to cover that one wrong. Also, just looking at this obvious bear trap that we just talked about, not only was it a bear trap with all the 200-week simple moving average and all that other sort of shit, but it's a bear trap here on the channel as well. You can see it just pokes the head out, baits people in. But not only have you got this is where we're converging multiple indicators, multiple trend lines, multiple moving averages to give the same result, show the same thing, where you simply go like this, horizontal line, back of the area, a little bit of a downwards knot formed. You see here, you know, similar points of confluence, bang, 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 pivot points, pivot points, pivot points. And you can see not only are we breaking above the channel, but we're busting out above this horizontal resistance point, come in, fail, and move back down. So this just creates an even more, not only did you have the 200-week moving average, not only did you have those two on-chain analysis moving averages, you've got a channel, you've got a breakout. Like most breakouts fail.
So this is going in there with a highlights reel. That is a real fail alert. I'll remember that. Here we go. Right, let's see.
Breakout traders, you need confirmation. All right, you need confirmation, good risk management if you want to be a breakout trader. Best thing to do if there's a breakout, wait for the retest. Everything's a lot easier with the retest. It didn't even bust above these wicks here of the range highs. If you zoomed in, you'd see a little range there. Didn't even go above or close at all above the range highs. No good. No good, no breakout. Sorry if you got caught by that one, but just, yeah, don't do it again.
Don't do that again.
Now we've got a similar thing occurring down here. We've got FOMC meeting. We've got a big week in the markets. They're going to announce a recession or not recession, and FOMC meeting coming in. I think tomorrow it is. So it's a big day in the markets, similar to there was here when they gave inflation numbers, CPI numbers. Got this massive John Wick, scam Wick, you know, busted people up. So I just recommend probably no positions open at this time. See what goes on here. You know, you could just see it's a very easy position right now, just at the bottom of this channel, bottom of this trend line, where you can just see if things do go sour with the news, you get breakdown, retest. If we recapture this, then yep, longs are on. Recapture that high there, longs are on. If we don't already make a high before this, and if it continues down, shorts are on, etc. You're just better off, unless you're an insider, unless you're Nancy Pelosi's side bitch, then you know, it's obviously a lot more high risk if you want to fuck around for the rest of the week. If you're still around, hopefully you enjoyed that video, and because this is obviously a relatively new channel, if you can like, subscribe, and all that sort of shit, get us going, get us out there, get me motivated, that would be very appreciated. Thank you.